Glad to know you're still with us. Well, one of Nigeria's most respected bank holding companies, FBN Holdings, announced its largest single shareholder, Femi Otedola, has sold down about 834 million shares of FBN Holdings in a deal valued at about 9.28 billion naira only. Now, according to the series of filings posted on the website of the Nigerian Exchange, Mr. Otedola and his entities sold about 834,939,764 units, representing about 30% of his shareholdings in the bank holding company. The sale also reduces his shareholding from about 7.57% to about 5.24%. Thus, 2.3% of the bank shares have been sold in a matter of 3 days. This is what we're going to be talking about. Well, we started the conversation, but now that we are joined by Alhaji Kufo Garuba, well, we'll be talking more about this. Alhaji, hello, good to have you on board.
Yeah, good to have to you.
Yeah. Okay, so based on what we're talking about now, some traders fear that the sale could impact the valuation of the bank that has just experienced its best price rally in years. What are your thoughts about that?
Well, it is so. It can be for speculators, those who just not rely on the basic of the fundamentals. But even the Femi Otedola is still one of the largest shareholders because you hold 5.3%. So when you hold 5.3%, you are a relevant person. Yeah. And what we are saying that probably he see an opportunity somewhere that he need that money to divert it into that, but not is leaving the entire entity. And we have seen the Q1 of the FBN that give you promising and show you that increase in the gross earning, increase in the profit before tax, increase in the profit after tax by more than 50% compared to the previous year. So it gives you confidence, and for those who understand the banking, nothing to worry about. It's just a mere business.
All right, thank you. And there are some who are asking, who are the buyers? Who is he selling to? Institutional investors, or are they individuals, rich people like him? Who are those buying?
You see, those buying are those who have seen the opportunity on the First Bank and they want to take position. Once you see opportunity, you try to take position. And don't forget that I have seen transaction going on even before that transaction. Okay. Meaning that people have seen the wisdom to invest more into the First Bank. And he is not the only major shareholder, though he is the one that recently pronounced because he was not in the system. Currently, we have quite a number of people, high network and individuals that have substantial holdings, though it's not up to 5%, but it's something worth mention. And the banks is aware of this, and the registers are aware of this. So some of them are trying to increase their holding, and these are some of the buyers.
Okay, sir, on this note, once I observed that for almost more than 8 months now, we have not seen the share of FBN being verified by the registrar. And at the same time, we are seeing that even the result you just mentioned, if you look at the improvement that result, is more of a recovery that impacted the fundamentals you just said. Then what is the fate of the bank if we have access to verify our stock and start selling? Because you know that this shareholding structure for FBN, for me, is a loose one. Nobody has more than 10% to it. That means every individual in Nigeria, few families has it. That means they can sell at any time. And if they are selling, it's not going to affect the price coming down more.
It will not affect the price coming down because there is willing buyer. High network individuals won't take position in the First Bank because of see the promise. Remember, First Bank is the only bank in Nigeria that makes a provision of 1 trillion as a bad debt. So if they can recover 1 trillion from their bad debt, what do you think that will be the future of First Bank? So for me, even if it is debt recovery, it shows you confidence and it shows you ability to recover their debt which have been written. Why the other bank cannot do the same? So for me, it gives confidence that, look, this is the bank to do with.
Okay, all right, thank you so much, sir. This is a good place to end this particular segment. Thank you for your thoughts.
Thank you.
Thank you, sir.
Yeah, I know. I mean, there's a lot to talk about, but we really need to go now because we need to analyze. We need to analyze, you know, the Q1 reports that we have from insurance companies. But we'll take a break now, and when we return, we'll bring you more on Analyst Hangout. Stay with us. All right, thank you and welcome back. Thank you for staying with us. Okay, so very quickly before we move on to we have analysis here that we'll need to go through. I understand once we do this, if we have enough time, we'll talk about Access Bank. I know everybody wants to talk about Access Bank, but it's fine. We'll talk about that later. But very quickly, we're looking at the first quarter result of some insurance companies, and here we will start with ICO Insurance. So I will have the picture up there. We have the analysis up there. This is for ICO Insurance, first quarter 2022. And so we have the gross premium, 17.17 billion naira. That's for 2021. And for 2022, we see 20.04 billion naira. And then we see a percentage change of 16.69%. For the profit after tax, we have 1.35 billion, and of course, for 2022, we have 4.47 billion naira, and then the change we have there is 142.18%. And then looking at the profits margin we have there, we see 22.3%. That's the profits margin, and of course, for 2021, we don't have anything there, and we don't have any change. I'd like you to start with that. What's your view of this result? How do you grade, or how would you grade this performance?
For me, for ICO, this is a good start for the new financial year 2022. Seeing this figure, EPS of 12 kobo for the first quarter, it tells you where the company
earning per share.
Earning per share, it tells you where the company is going. That means for a whole year, we expect around 40 to 45 kobo at the end of the financial year, which is also good. But don't forget that this bank, this insurance company has also a large share in issue with series of bonus. But if at this point we are still seeing this a strong number of 12 kobo with that bonus issue, it tells that the insurance company is also in the right direction to support the price. But it's selling below 1 naira as we speak now. I mean, for those that want to take long-term position for insurance stock, they should also look at the way for it. Depends on your investment objective. There are some people that they don't play insurance stocks, but those that understand to play this penny stock. But for me, it's a good start for the current financial year for our ICO.
All right, so this is what we'll do. We'll just very quickly take each of them individually, and then later we'll have a summed up review of everything. So for Sunu Assurance, we have in 2021, the gross premium for Sunu Assurance, we have it as 1.09 billion naira. And then for 2022, we have it at 1.53 billion naira. And the percentage change is 41%. For profit after tax, that's in 2021, it was in the negative, a deficit, minus 319.41 million. And then in 2022, we see 87.41 million naira. And then the percentage change is 127.30. That's for profit after tax. When I look at this profit after tax and look against the gross premium, I see that even though, well, this is an improvement from what we had in 2021, I still feel that it's quite low, from 1.53 billion to 87.41 million naira. I think I'd like Alaji to come in here.
Well, you see, it's very difficult to understand the insurance because the way and manner they handle their issues.
Yes.
If you look at the ICO, increase in the gross income by 100%. But when it comes to the profit, it's less than that, not even up to 50%. Now you are talking the profit increased by 100%, while the gross earning increased less. The most difficult thing that, yes, we have regulator of this insurance, but they need to do more and better. And that is why you see most of them, they are trading as a penny stock.
Yes.
I remember in 1997, we traded ICO at 12 naira. Today, I talk of ICO at less than 1 naira. Most of these insurance, they are less than 80% of their previous value. And yet we have not seen changes much, despite reconstruction and reconsolidations. I think insurance, they need to do that, but we need the NICO the regulators to please look at this book and make sure that there are more transparency and governance in their operations.
Okay, sir.
All right, thank you. You want to say something?
I just say for Sunu Assurance, we should look at the fact that they are coming from the negative side to the positive side, meaning that they have recovered all the loss and they are now reporting a positive figure, which is a good one, which makes it more attractive. If you look at it, provided they will maintain the trend, is a place to position yourself, because by the time 2 more positive results comes, investors will revalue the stock.
Yeah.
Okay. Yeah. All right. Do we have Rotimi? Okay, I guess we only have Alhaji. Okay. Now let's look at NEM Insurance. Like I said, we'll take a look at each of them and then we'll do a general overview. Now for NEM Insurance, that's the first quarter 2022 results. In 2021, the profit after tax was 9.36 billion. It should be 36.
30.
It's 36.
Okay.
9.36 billion naira, and then in 2022 we have 11.88 billion naira. The percentage change there is 26.91%. And then when we look at the profit after tax, we have 1.09 billion naira, and that's for 2021. For 2022, we see 1.55 billion naira. Now, the percentage change is 41.49%. Now, the earning per share, that's 4 kobo, and then for 2022, we have 15 kobo, and then the profits margin 11.65%, and then in 2022, 13%. This is a good result, isn't it?
Yeah, I would say that NEM is starting on a very good note for investors. And don't forget that.
Because, sorry, I'm looking at the profit after tax. The margin is, I think it's still okay.
No, if you look at the top line, bottom line, it's a good performance. They are above 20% up, which is good for me. But if you look at the earning per share, you saw 4 kobo and 15 kobo.
Yeah,
ask yourself, why almost the same thing, it moved from 4 kobo to 15 kobo. It's a lot of what the concentrated share. They reduce their share in issue lower, and that only impacted their earning per share, which is good. It tells you that is why in this industry, look at which among these companies have done share construction, is their performance also coming in a way that is going to support the price. But I see that what will just show us now, so that NEM is in that direction that will support the price of NEM going to the future. And don't forget that when the insurance was struggling, NEM was one of the insurance companies I said that most consistent in dividend payment. Even when the whole there was a crash in that sector, they keep on paying their shareholder dividend. For me, it's a good one for NEM. This is a good result to start the current financial year. For me, it's a good one. Okay,
so very quickly, let's move on to Axam Ansad. For Axam Ansad, we look at the gross premium. In 2021, they had 12.81 billion naira. In 2022, they had 17.26 billion naira, and then the percentage change is 34.7. And then for profit after tax, we saw them reporting 2.63 billion naira in 2021 and 386.28 million naira in 2022, and that's a deficit there, minus 85.32. Alhaji, what happened to Axam Ansad?
You should understand that Axam Ansad, initially they have Mansa pension fund, and that increased their gross earning and increased their profitability. When they decided to divest from a Mansa pension fund, their gross earning has to go down and their profitability has to go down. So that's what really happened to them. So you are not comparing likes and like. 2020, yes, 2020, they have Mansa pension fund. 2021, without Mansa pension fund. Maybe if you go back to the company, you will see the differences. But that's what really affected. And we believe that next year will be comparing like to like, and therefore we'll see the changes.
Okay. All right. Okay, and we'll take 2 more before we then do the general overview, because I want to pitch them against each other and see what we can learn from each one and what investors can do and what investors probably shouldn't do. For consolidated hallmark, let's look at the first quarter 2022. That's what we're checking. And so for the gross premium in 2021, they had 3.23 billion naira. And then in 2022, they had 3.69 billion naira. And what we have there is a 14.4% change. And then for profit after tax, they had had 291.45 million naira in 2021. And then in 2022, we have 441.91 million naira. And the percentage change is 51.62. Now, earning per share is 2 kobo, or was 2 kobo in 2021, and in 2022, 4 kobo, and then the profit margin, 8.98% in 2021, 2022, 11.96%. What's your view?
It's a good result, and it's a very good performance. If you look at almost all the insurance stock, their performance, except the one we just look at, as far as I'm concerned, the growth is marginal as far as I'm concerned compared to what others are doing. But if you look at this result, it's a result that shows that they have a very good start, and it's a place to position for the next quarter.
Just like you just said, and this is the only insurance company I know that is consistent in their trade dividend paying.
Yeah.
Custodian Hallmark Insurance have been consistent in trade dividend paying, and even full year. For me, it's a good start for them. You can see even the profit margin that they are making more profit in terms of the expenses, and I tell you that they are well run. For move from 8.98 to 11.96, it's an improvement in terms of the returns and the management of their resources. For me, it's a good one for Hallmark Insurance.
All right, Alhaji, let's have your thoughts.
Yes, I totally agree with him. It give you good hopes when you see both increase in the margin, increase in the profit before tax, profit after tax, and turnover. So it's a hopeful company, and for every investor, I will advise you, if you don't have it in your insurance sector, have this kind of stock, because it gives us confidence of the future.
Yeah.
All right. Okay, a very quick look at Coronation Insurance. 2021, the gross premium, 3.46 billion naira. In 2022, 4.75 billion naira. And this has a percentage change of 37.29. Profit after tax for Coronation, 639.36 million naira. 2022, 810.14 million naira. And the percentage change, 26.71%. Now, for earning per share, we have 2 kobo, and then for 2022 we had 3 kobo. That's talking about Coronation Insurance. Coronation Insurance, yes. And then the profit margin was 18.49% in 2021, and then 17.06%. Okay, 17.06%. Well, that's what we have here.
Yeah. Look at it.
If you look at the profit margin, there is a reduction in the performance. But again, if you look at the result in itself, there is a growth.
Yeah.
Only that the profit margin is showing that there are more expenses during the quarter compared to the previous year. But generally, it's still a very good result.
Yeah. Good number.
I want to have your thoughts on that.
No, it's a good number. Yeah, just said it off. It's a good number.
All right, so moving away from that one, Lasako Assurance, we have the gross premium, 4.57 billion naira. That was in 2021. And then in 2022, we had 4.33 billion naira. And then we had that was a minus 5.28%. And then for profit after tax, 181.39 million naira. That was in 2021. And in 2022, 297.57 million naira. Then for the percentage change, 64.05. Yeah. That's the percentage change. Then earning per share, 9 kobo, 2021, 2022, 16 kobo, and then the profit margin, 3.94%. In 2022, we had, it still had, it was in the first quarter, so 6.88%. Al-Haji.
Yes, I think I respect this company for one thing, try to go for the quality earnings. Because when the gross earning decline, yet profit increase, it shows you that now you are going for those that give you money. Because there is no need to carry gross earning in billions and declare lower profit. It's better to have less gross earning, but that is very qualitative one and give you a good return. And this is what Lasako shows. And I think it is a good lesson for the entire insurance industry to not be carried away by the gross earning that doesn't bring you anything to the bottom line. Go for the quality one. Even if you have less gross earning, better profit, it shows you confidence. But for the company, I think the investors were delighted because they pay good dividend. And with this earning, they can maintain that dividend and pay better. So I think it's a stock that one should have.
You know, I was going to ask you that every other, like a good number of the other ones seemed to grow their gross premium except Lasaco, but it feels you've already given an answer irrespective of my observation. Or do you still want to talk about that?
No, you see the truth of the matter that this gross earning is not all of it carry quality. And when you have the quality one, get the one that give you bottom line. Ignore those gross earning that doesn't add to your bottom line. And that's what Lasaco did. And I believe that the other insurance should learn from them. That not every business you carry the one that give you the bottom lines.
Yeah, actually, just to add to what Elijah said, yes, top line is also very important when we are looking at a company result. He just said it that yes, they are kind of concentrating on business that are giving them money. But you look at, you need to grow your top line to show that you're also entering a new market, you're also expanding your business. But if your top line is declining, I will give Lasaco just a benefit of that, because this is a marginal decline, and we expect to see their Q2. If their Q2 remain also in that direction, I won't say this number for me is interesting, because for you to make a good bottom line, you should also expand your top line to support your bottom line. Yeah, this is the first one I'm seeing a decline here. Let's just give them benefit of doubt, as I just said. You will see their Q2 number, but all the numbers are looking good. But that decline for top line for me, any analysis you are doing that top line is declining, you have to be very careful, because if your top line is declining and your bottom line, that means there's a kind of one-off income, especially income that have come between. That's why we are making that a big bottom line. We need to see the Q2 number for us to conclude on Lasaco. But the good thing that Lasaco did recently also constituted their shares to reduce their share in issue very small. That's why you can see a good earning per share, which allows you to say that they are consistent in their dividend payout, which I agree. But with this lower share in issue, that will support the earning per share. At the end of the day, they pay good dividend to their shareholder, because they have been consistent in the past years.
You know, he mentioned something. Alaji, you want to say something?
Yes, I want to say something,
okay.
Because we have seen where top line increased by 100% and the bottom line increased by 22%. So what kind of increase do you look for? Quality one or just mere absolute figures? Increase in the top line should be supported by the increase in the bottom line. Anywhere you get increase in the top line and the bottom line is not increased commensurate, then you have to check yourself. Are you doing it right?
Okay, I want to go with Alhaji, because he was talking about businesses. Like, it's not every business you take on.
I agree with him forever. I tell you, for you to get that robust bottom line, it's possible that they are having more exceptional items as income that supported the bottom line. If your top line is not growing and your profit should not move as fast as that, there should be either exceptional item that come that supported the bottom line, because in between your top line and your PAT, it is expensive that comes there to reduce your board. Now we are seeing, despite there's a decline in your top line, we are seeing a robust bottom line. Either there's additional income that come in between that support that bottom line. That's why I say, for me, I want to see the Q2 before I conclude. No, Alain is absolutely right, but I need to see the Q2 before I will conclude.
But just to add to this, I've looked at some of the figure of this company, and what I've seen is good management.
Okay.
If you look at the efficiency, if you check the management efficiency, it's very high.
Okay.
You see, when they discovered that the business is low, they manage their expenses.
Okay.
You need to look at those figures. Though truly there are some exceptional items, but if you check what they did, you see that the management is reliable and they are professionals. That's why we have such figures. If other companies undo what they did for this first quarter, they are going to report a lesser figure or a loss.
Let's see the Q2 number to conclude. Yeah.
Exactly. We'll wait to see the Q2. I think that's just the consensus right here. Yeah. Well, given the results across board, are we already seeing the impact of the recent recapitalization in the industry, Alaji?
Yes, you see, we have not seen much.
Exactly.
Because increase in the capitalization take a longer time before it yield. Because most of them, they have their strategies planning, and some of them is too early to assess them. But give and take, it gives us the confidence that this insurance is a sector that one have to look to. If you don't have it in your portfolio, start thinking over it, because really they are paying good dividend now. and with good increase in the gross earning and the increase in the profit, it shows you this is reckoning because they are doing much better than the inflation, and one should have it in as part of your portfolio.
All right, let's have you.
I agree with Alaji that if you begin to check insurance company maybe 3-4 years back and you check their performance recently, you realize that perhaps maybe because of regulations and some other things, they are doing better than before. And so if you are checking your portfolio and you don't have stock like Aiko, Lasako, and all these stocks in your portfolio, it could be that later you will regret it. Because if the result, the way market works is that people value you by your result. So if your result is doing better, you will see that the valuation will go up. Yeah. And even on the floor of the exchange, investors will value you higher. So if you are not looking the way of the insurance stocks now, it could be that it's when some have already made the profit that you'll be coming in. But like Alaji said, we must start looking at some of these insurance stocks now.
We heard you very well.
Actually, what we call the reform that is going on in that sector, for me, is a plus for the industry. That means investors should look at where it should go. Because seeing their top line improving, it shows that the regulators are not sleeping. Because I know that they are increasing some premium for those in the sector. And when you increase your premium, it's going to reflect on your bottom line. And that will be going to the future. When that is finalized, we'll see that improvement turning around the sector. Like all my colleagues have just said here, I think the sector that one should be looking at, start investing gradually in those sectors. But I always said, look for the leaders in the industry. There are some laggards that don't do because the sector is shining, we are seeing prospect in it. Go for the leaders in the industry. That's the best way to invest. At the end of the day, you know that your portfolio is also protected. Because we know that this year, between now and February next year, we'll see a lot of uncertainties, but be in good stock that at the end of the day, you can smile to the bank.
Okay.
Those ones paying dividend.
Yeah. It's good to put that in. All right. I think we've done a great job looking at these insurance companies. And well, the eyes have it. Those who wanted us to talk about Access Bank. Or should I change my mind?
Oh, go ahead. Go ahead.
Okay, Alhaji, I knew you were the chief person who is interested in talking about Access Bank. Now, Access Bank is set to acquire Kenya's Syrian Bank for 15 billion naira. What's the gist in this story?
Well, the truth of the matter that this is not the first time, second time, or third time they have been compared.
Exactly. Thank you, sir. It
shows you that if really in Nigeria you want to play with the bank that is Africa, not Nigeria.
We missed you there. Alhaji, can you hear me? Okay, please say that again. We lost you.
Yes, what we have said that if truly you want to deal with a bank which is African, not Nigerian bank, Access Bank is one of them.
Yes.
Because they are expanding both inside Nigeria and outside Nigeria. And it shows you that that is the only way to growth. And now it's not to be comparable with its peers. Because if you take all those that are trying to match with Access Bank, they cannot match. In Nigeria, they have displayed it, and outside Nigeria, they have displayed it. I advise the investors that make sure that in your portfolio, you have Access Bank. Because with this growth, it shows you Kenya is one of the biggest economy in the East Africa.
Yeah.
And they are already there. And even in Kenya, they keep on increasing and expanding. So what it shows you that they are not only increasing and expanding in Nigeria, they are doing it even outside Nigeria. And this is the truth of the growth, and other banks should learn from Access Bank.
Thank you, Alhaji. That's quite instructive, I would say.
Just like Alhaji just said, different banks have their different plans for growth.
Oh, well.
If you look at the
Fair enough.
Yeah, the growth for Zenith Bank and the GTB and others, most of them are organic growth. But for Access Bank, they choose merger and acquisition to live. That's why you can see as they are expanding their capacity. As we speak now, they are leader in terms of turnover in the industry already. Though the bottom line, the Zenith banks are ahead of them. With this expansion, once they are done with this expansion, I'm telling you that the bottom line of assets will become wow, that it will swallow all that and become the leading bank. That tells you that as an investor, like I just said in instruction, just look at that way, but think medium and long. Assets might not move in the short term, But if you are thinking, I said, think of medium and long term and position there. Also, like I was telling my colleague here before we entered the studio, a friend of mine in Gabon told me that in the morning they were driving down to his office, coming back, he saw Access office already. They are launching another branch in Gabon. It tells you that they are really spending around Africa, spreading over, and also in investing. People should know that if you are earning in dollars, you are earning naira. I call it a dual earning. That makes you, at the end of the day, your earnings become powerful. That is why a lot of companies in Nigeria that are doing that, in the coming master class, we're going to tell them which company that you should position and stay put, because we see opportunity in those companies that are earning in dollar and naira. How do you stay ahead of what inflation and also support the price? That is why, as an investor, look forward to join us on July 2nd for the master class. So at the end of the day, you have your right portfolio for the rest of the year.
I'll let that slide. Okay.
You let this slide.
All right, so let's
he said it all.
Thoughts.
If you look at Access Bank, they are not relying on what they are doing in Nigeria.
Hello.
For example, if there is a challenge in Nigeria economy, you can still see this bank doing well. But again, investors need to watch out, because if you look at what they are paying now as dividend, you realize that their payout ratio for now is low because they are investing.
Medium term.
So if you want to look at it now and say because the payout is low, you don't want to stay there, you realize that by the time they sort out all this their investment and they settle down very well, when the result will start coming up, you might not be there.
Yeah, you miss it.
All right, thank you so much. I think that's a very good place. Exactly. I guess this is a very good place to end the conversation. The conversation today has been quite instructive. It's been entertaining, I must say, and it's been informative.
Yeah,
thank you so much to my panel of analysts.
Thanks for having us.
Absolutely. Alhaji Korufi Garuba, MD, APT Securities and Funds Limited. Thank you for joining us.
Thank you very much.
Thank you,
all right,
sir.
And of course, Mr. Jari Ogbe Tunde Shegun, independent stock market analyst with TradeLines.biz Investment Limited. Thank you for coming on the show.
Thank you.
And of course, thank you so much, Ambrose Omodio, CRO Invest Data. All right, it's a wrap on the show now. Thank you so much for joining us. We'll see you again next week. I am Perpetua Fasomi Peter. Bye for now.